Buying crypto nowadays can be banned in a few seconds through apps, but unfortunately very often certain steps are overlooked before investing correctly. So in this video, I'm gonna review 12 very important criteria to take into account before embarking on the purchase of your first cryptocurrency. And all those criteria are very important, so look it one by one and ask yourself this question before investing. So let's start with the very first criterion, because we are talking about investment, so we are therefore talking about money. This is capitalization. And capitalization may be like a barbaric word, but I'm going to try to simplify it to you in a few seconds. And besides, it's the goal of the channel to make investing accessible. So do not hesitate to subscribe, to like, and to click on the notification bell to be aware of my next video. Here we talk about finance, investment. My name is Jay French, so welcome to you. So I was talking about capitalization. It is the total amount of token or coins in circulation for a given cryptocurrency. So to do the calculation, it's very simple. You take the value of the token, let's say on CoinMarketCap, and we multiply it by the number of token in circulation, and the market capitalization is higher, the more popular and liquid is the cryptocurrency. But also, the greater the capitalization, the less likely it will be to perform. Take for example the capitalization of Bitcoin, which is already very substantial and today represent about 40% of the cryptocurrency market, which is called the Bitcoin dominance. You have understood it. With Bitcoin, we will not necessarily make 10x in the few months. However, a cryptocurrency with a small capitalization, which is also called a small cap, will have more potential to see its value make a 10x, for example. Here is just an example. And capitalization, therefore, is a good indicator to know if the cryptocurrency has potential and if it is adopted or not by a community. The second essential criterion is the volume of exchange. This volume of exchange is the quantity of tokens exchanged during a given period. This can be a day, a week, a month. The larger the trading volume is, the easier it is to find buyers or sellers for this cryptocurrency. So if there is no volume, ask yourself if this cryptocurrency really interests and arouses interest. Beware, however, of artificial trading volumes created by bots that distort this data. This is often the case on cryptos out of the platform, let's say DeFi, and with low transaction costs. The third criterion, and perhaps the most important, is what I call the underlying technology of cryptocurrency. It matters because it determines its functionality, its security, its scalability, and an adoption potential. It is important to know what this cryptocurrency brings to the ecosystem and ask yourself if there is a real use and a real potential. We can also call this the fundamentals to ask yourself the question, what does this crypto really bring to the ecosystem? The fourth ultra important criterion, it is the community and the ecosystem. A cryptocurrency supported by an active and dynamic community as well as a developed ecosystem is generally considered to be more solid and has greater growth potential. It is a criterion which is added to the capitalization and also the volume of exchange, and it is very important because without a strong, experienced and very important international community, the project may not last. The point that it is very important to me, it is the fact that the project has an international development capacity for adoption and not simply linked to a single country. The fifth criterion, and not the least, it is regulation. Regulation is important because it can have a huge impact on the adoption and use of cryptocurrency. It is important to check the local and international regulation in force before buying in a cryptocurrency. We see, for example, Ripple, which had a lawsuit, but other cryptocurrencies are in the crosshair of the American policeman, who is the SEC, Security Exchange Commission, and we can talk here about regulated or unregulated cryptocurrencies, but also security tokens, stable coins also. So watch if the crypto is not under radar of any regulation. The sixth criterion, it is transparency. Transparency is important because it allows investors to follow the use of funds, projects update, and the activities of the development team. For this, there are different means. We can follow the transaction on the blockchain, know the number of holders, and know if, for example, 90% of the funds are held by 1% of their holders or not. And there are also sites like bubble maps, which allow you to know at a glance how the tokens are distributed. The seventh criteria, and not the least, it is liquidity. Liquidity is very important because it determines the ease with which we can buy and sell your cryptocurrency. We can see on CoinMarketCap if the token is available on many platforms. More it is, more the token is available to the general public. Also, the reputation of the platforms on which the token is available is very important. This plays on its global reputation and its seriousness, but be aware this does not guarantee anything. The eighth criterion will affect the performance on your investment, and this is volatility. Volatility is the inherent risk in investing in cryptocurrencies, so it is important to take price fluctuation into account and to adopt an appropriate investment strategy. More the token is volatile, more we can expect a strong increase but also a sharp drop, so watch out. The ninth criterion is often very forgotten, but it has a considerable importance. Tokenomics, or the token economy, refers to how the crypto in question is issued, distributed, or used in the system. It is important to understand the tokenomics of cryptocurrency to assess its long-term potential. Factors such as maximum supply, initial distribution, method of mining or transaction validation, and also reward policy are key Tokenomics elements to consider when trading and buying this crypto. For example, you should know that private investors or the team that contributed to the creation of the tokens have release or rewards phases. This is called vesting, for example. The first investors will touch the token 12 or 14 months after the creation of the token, and I will not go into details here, but this criterion is very important and I invite you to find about the subject, especially if you want to invest in a young project. The 10th criteria is, I say, separated from the other criteria. It is the age of the cryptocurrency. The age of the cryptocurrency is an important criteria to take into account. Cryptocurrencies that have been in the market longer generally have more historical data available for analysis. It has also a larger community of users and may have faced challenges and obstacles that have been overcome. Let's say, for example, bear markets. This can make these cryptocurrencies more stable and predictable than new ones. However, new cryptocurrencies can also present attractive investment opportunities for those willing to take higher risks. The 11th criteria is network fees on which the token relies. The fees related to the purchase, sale, and transfer of cryptocurrencies can vary considerably from one blockchain to the other. The one who has the higher fees, it's Ethereum. In the few months, the fees will be much lower, but for the moment, this blockchain is very important in terms of fees. But if you take Polygon, which is a layer 2 of the blockchain Ethereum, it is scalable and you have much less fees. So it is important to check fees associated with buying and holding cryptocurrencies before deciding where to buy and on which blockchain to buy. The 12th criterion is competition. It is important to consider the direct competitors of the cryptocurrency you wish to invest in. Cryptocurrencies that offer similar functionality or alternative solution can impact drastically the potential for cryptocurrency growth and success. Of course, here there are other criteria to take into action. Please comment with your own criteria. Here it is simply a non-exhaustive list. So tell me in the comment which are the criteria you take into consideration before investing. I see you in the next video. Don't forget to see this one, which is very important. See you soon. Bye.